newsletters.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 27th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us can always be, or should always be, pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary day, an extraordinary weekend, an extraordinary life, an extraordinary everything. Yeah, that's what we need to do, and the easiest way to do it is to always remember that life is happening for us. Even in the most difficult of times, life is happening for us. Today, you and I, we're going to go check out the circumstance. When that happens, when we realize that, it means we can find the gift, folks, in every set of circumstance. So today, let's go check out the circumstance of these markets. Let's go figure out what these bulls and bears, what these buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, much, much more important than that, is during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. If you can't dial in, you can always give me a call. Well, you can always send me an email. If you can't dial in, obviously you can't give me a call. Well, you can do it mental telepathy-like, but probably easier to just let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Inside our Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices in the red, off about 3% or so. Dow off 700, S&P 73, NASDAQ 100, 227. Of course, what you and I want to know is, what does that mean? Leading the charge to the upside, Dexcom is up $14, 5%. Teladoc Health is up nearly $10 or 6%. Zoom Video up $10, 7% to the downside. It's Booking Holdings, Google, Amazon, Chipotle, TransDigm Group, some of the high flyers out there. Let's go take a look at it. And I covered the 1 p.m. update for Tommy, and we took a look at the S&P 500. So let's look at something different. Let's look at the Dow. Many of the indices, or all of the indices, now I can't say all, but most of the indices have the same pattern. The same pattern is the weekly pattern out here. You don't find a lot of A to B equals CD down patterns inside the weekly time frame chart. They just don't happen that often. Here, though, that's what's happening right now. Now, this is because we know that we've been in such a extended rally since the 1970s. Yeah, exactly. Don't let the mere fact of a 20% or 30% or 40% retracement catch you off guard and think that that's it, it's over, we're headed lower out there. It's not the way that markets work out here. We just have corrections. We typically have at least one 10% correction each year, and about every 3.5 to 5 years we have these greater than 20% corrections. Look, the most important thing to understand at this stage of the game is a major bottom signal. To the extent that you believe in H.M. Gertley, to the extent that you believe in the A to B equals CD pattern. And again, I teach you the difference between the way that most will teach the A to B equals CD pattern is people get caught up in A to B equals CD, and they think that you should buy the D point or sell the D point. I'm going to share with you, if you do that, you're going to just simply get your arse handed to you. It doesn't work that way. Price will continue to move down on a chart until you start to see some type of bullish reversal candle. That's really, buyers and sellers are here to provide you and I with information. Prices are going to continue to move higher unless you see some type of bearish reversal candle. Now, where those candles form is really important. Muy importante out here. In the case of the Dow, you can see the 1 to 1.618 A to B equals CD. I could draw it even a different way out here, but you've got an A to B equals CD pattern, and now you've got the bullish reversal candle inside of the Dow. You've got a key reversal. You've got a bullish engulfing session. So this is suggesting to you and I that you've got a very viable bottom out here. Now, on a weekly time frame, we can see that Stevie's green line changed to red, and we know that when that occurs, that price and that line are going to catch up to each other over the coming sessions. I can't tell you how many sessions, not because I can't tell you, but because I can't tell you. But what we should see occur over time, and that will become the real test, that'll become the real test of the counter trend rally, is what happens to price when it is tagging that line. A test and rejection would say, okay, we're getting ready to move lower. It doesn't say we would bust out the lows or something along those lines, but that's what we would be looking at. Now, you and I could go look at all of the indices out here. I had said that I couldn't say it about all with regard to this pattern, and the one that I can't say it about is the Russell 2000. Wish I could, but I can't. So I don't have that pattern out there, but we do have it no matter. Let's take a look at the semiconductor index as an example. That one was percentage-wise about nearly 4% to the downside out here, but take a look at this pattern as well. Now, what's nice about the semiconductor index, when you form a bottom pattern prior to a breakout area, and the breakout area on a weekly basis for the semis was 1143.24. Price did not get down there. That's a real bullish sign. In fact, if you look at Stevie's green line, it's still green out here. So there's a same outcome. That price needs to go test that, like we took a look at inside the S&P during that 1 o'clock update, or we looked at the Dow just recently. No, don't have that same pattern out there. But we do have, as far as the pattern goes, is a Gartley buy pattern inside the semis. We go take a look at the Wilshire 5000. And again, the importance is, look, the gyrations that we're seeing during the day, they can get us off track. I want to keep you on track. And the track here is just simply to understand on a weekly basis what has transpired. We couldn't say that last week. We couldn't say that the week before, but we can say that this week. What is it that we're saying? What we're saying here is that we have these nice Gartley buy patterns nearly across the board, most of the indices out here, and in many of the indices we have Stevie's oscillator and change line that has changed from green to red. And red is not good, but when it does changes color, it's not a chameleon. It's a signal that tells us that price and that line are going to catch up to each other. It could be the line moving lower while price is moving higher. It could be all sorts of combinations out there, but it does suggest that we should see higher prices. The question you're asking yourself is, well, when are we going to see higher prices out there? So that's a question that I'm trying to answer for myself. Here are a couple little things that we know. You don't have to really be a super technician to figure this out. Figure what out? Here, if we take a look at the in real bull runs, we got the Dow Jones out here from the 2016 era. So this, I'm just on my screen, I've got from 2017 through 2018 out here. And in real strong bull runs, I'm not saying we're there just yet, but we got real strong bullish signals on the weekly time frame. So maybe we are, but just follow me here. And there's no arguing that this was a strong bull run. In strong bull runs, what we will typically see is little knee-jerk reactions to the downside, which are basically 3 days, where each day the low was a lower closing low than the day before. You can see those are the red threes on the bottom of my screen out here. If we're in a strong bull run, that says we see the markets close lower for the next 3 days. Something to think about. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So great question there, Peter. Peter in the Tiger's Den, who had his ears listening, his eyes on the charts out there, and asked the absolute obvious question, although not necessarily obvious to everyone out here. Here, if you take a look at that little 3-bar reversal kind, and when I say reversal, I'm just really 3 down days typically in a bull market. Again, where each closes is just below the close of the bar prior out there. And those are like those little knee-jerk lows. And Peter asked that question, is the opposite true in a bearish market? In other words, we just had 3 up days in a row. 3 up days in a row. That was yesterday's high. And his question was, can that be the sign that this is just a counter-trend rally? And the answer to your question is it absolutely can. Now, that's why we really need to be careful here, and why if the market does close lower today, which is likely, but versus yesterday, and then lower on Monday and lower on Tuesday, that's one of the areas, Peter, where I believe that we would get that answer out here. What has me thinking that So here's the problem. Here's also the other. Here's the fundamental problem that we have. And you and I are just simply going to have to look for support to see if support holds to help us answer that question. We'll go do that. But the fundamental issue that we're dealing with here is unlike normal thinking. So today is March the 27th. We have 2 more trading days. We're going into the end of the month. We're going into window dressing. We're going into fund buying. Maybe. That's exactly right, Peter. Too much rebalancing that is potentially going on out here. So what you and I don't know is we don't know what's happened to all these hedge funds that are out there. If there's still liquidation that is going on, we just don't know that, and that's why you and I. So we've got that 3-day knee jerk move out here. Does it work perfectly? Heck no. But I'm really trying to use a set of tools that will at least help us understand what's good. Because what I don't want people to do right now, things are still bullish. We took a look at those weekly charts. And if you get a down day today and a down day on Monday and a down day on Tuesday, what I want for you is I want you to be able to say, hey, I heard that guy, Stevie Perseverance Rhodes, who said that's what likely would happen out here, and I don't want you to bug out. Likewise, if you haven't caught any of this rally here, I also don't want you to think, where do I get? Well, I'm just giving it to you. Let's look to see if we get a little 3-day move to the downside, and that, especially if support holds, would be an area where you could consider getting in. Or just simply use that 3-day tool out there. So let's come back and take a look at, go back to Jay's question, which was, can we take a look at the TAS market profiles? So here's one of our 4 quadrant. I don't know if this is the one that you were looking for, Jay, but here we've got all 4 daily equity futures contracts. And right now, the ES Mini, so where's support out here? Well, support is really the bottom of the profiles, unless you're trading above the top of the profile. Now, in yesterday's case, we had a close inside the ES, the NQ, the YM, the RTY, each above the top of those daily profiles. So far, you have the ES Mini sitting right on the top of that daily profile. So a second close today above 25.40 would be bullish. And it's possible that that's a support level, and you can throw Stevie's 3-day tool right out the window. It's just a 1-day wonder in pulling back to support. I would more likely say that is the conclusion to draw if each of the futures contracts for a second day in a row, even on a pullback here, close above the top of their profiles. Because that is a change in trend signal out here. So what are we going to be watching? It's really the same thing we talked about yesterday and the same thing we talked about the day before. It is the NASDAQ. It is the NQ out here, which is back inside its box. It doesn't look like a box. A box is referring to it's really a rectangle, right? If I could draw sidelines out here, but just really referring to the range of those TAS market profiles. And 7760 is the number that the NASDAQ would need to close above. The Dow is trading above the top of its profile. The Russell is trading above the top of its profile. I most certainly would not be suggesting to you that we just had this 3-day counter-trend rally and that you should go short. Doesn't make sense in the ES, doesn't make sense in the Dow, doesn't make sense in the Russell 2000. Even if there is going to be a little 3-day pullback here, these charts are still bullish by being able to close above the top of those profiles. I think I was trying to populate a chart. Let's see, yesterday's show, and it didn't populate. I don't remember where it is. Let me see. Is it? No, it's not that. It's not that. It's not that. Sorry about that. It's not that. It was this one. But what are the green lines? Are those the tops or those are the tops of the profiles out here. So here I'm just showing you the top of the daily profiles. The top of the daily profiles out here. I should show you the bottoms too, but let me see here I thought I was trying to get that. Oh, I was trying, but I forgot to hit the button. There we go. So there's the bottom. So the red is going to be the bottom, and that's support. The top is going to be a green, and that is resistance out here. And when we close above, you can see here when the market, the ES Mini is what we're looking at, begins closing above the top of the profile, it's telling you that it wants to continue to move higher. It took out resistance out here. If price closes underneath the bottom of a daily profile, and again, I like to use the 2-day rule because the one-hit wonders really don't do a whole lot. They're great tunes, but you wouldn't want to invest a lot in them. So I don't want you investing in 1-day wonders out here. Okay, and so here you're seeing how price behaves moving above the top of a profile out here, and it's generally speaking. So right now we're generally speaking, this is a positive sign out here, and it closed today above that for a second day. That'll be a really strong message out there. So that's the profiles, Jay, and taking a look at it. So backing and filling, and possibly. I want the anticipation to be that in strong bull market runs, we will typically, when we start to see markets pull back or what have you, we really see what typically is a 3-day move lower. And I think Mr. Bill or something wrote in there Larry talking about Fibonacci sequence 1, 1, 3, 5, 8, 13. What's the next one? Is it 2754, something along those lines? I used to have them all memorized out here, but the 3, go check it out on your charts and see what it might provide for you. Now, I know I had a question that came in earlier, but I wasn't really prepared here, so I'll do it during the break. No, the question that came in was for. Let me see if I got it set up. Did I do it? I wasn't Home Depot. Shoot. Okay, I'll figure that out during the break. I'll get the questions that have come in by email. Take a look at the New York Stock Exchange, get a feel for what it's doing here. Advanced decline oscillator. We talked about yesterday the importance of being above the 150 level. For us, that also communicates to you and I that we should see higher price. Remember, yesterday I said that doesn't mean tomorrow. And so far, so good on that. The advanced decline oscillator being above the zero threshold level, an ideal thing would be a 3-day pullback, with that still being above zero, and then we get that turn to the upside. That would be the bullish piece here, and maybe eventually we can get that spot volatility index to participate, at least get the down below the upper Bollinger Band of 5631. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 743, S&P down 79. So the first question that came in this morning is from Robert. And so Robert writes, hey, Steve, great show. Thanks for saying that, Robert. I am short oil using the ETF UCO. Can you give me your take on how much lower oil can go? Absolutely. So let's go take a look at the oil contract out here. And let's do that by using this 4 time frame chart out here. And this 4 time frame chart allows us to take a look at Stevie's synthetic version of the contract that allows us to go get a lot of historical data, so we know where the daily, weekly, monthly, and quarterly TAS market profiles are, and prices below all of them. There is a new daily profile out here. I would say you would be watching the 2214 level. The close below that suggests lower price, but I'm going to caution you, Robert. I'm going to caution you. This is sneaky, but here's what I see right now. I see a closing, or I see a low on March 18th of 2052. The next low that I see is March 23rd, 2080. And today's low so far has been 2108. What do those 3 lows have in common with each other? Each of them, thus far, are higher lows. Not saying that today's low can't take out the previous low and then the one before that. I'm just saying, if I'm short light sweet crude right now, which basically you are, you're just using an ETF out here, the sphincter muscle would be getting a little bit tight, even with price below the bottom of its daily profile. And then I'd be doing just simply the fundamental question: how much lower do you think light sweet crude can go? You think they're just simply going to just, this is going to $0, $10, $50, I think you've got to be really careful, and this is just a little subtle. So that would be the first subtle thing that I would pass on to you, Bob. The second subtle thing I'd be watching for is the short-term time frames, at least. And on the short-term time frame, I'm not sure. Let's go see what we have out here. What we have out here on a 30-minute time frame is a TD9 count bottom. So the low that took place today, and this is where you can, hang with me here. If today's low doesn't get taken out, boy, I'd be really, really cautious. I'd be super cautious going into the weekend out here. Yeah, so you're asking how much lower can light sweet crude go? So what do? Take a daily time frame chart like this out here and draw an A to B equals CD pattern or something, or maybe a weekly. Let's do the weekly chart. I think I already have the A to B equals CD pattern here. That way we at least get more data out here. Look, the weekly chart, unlike the weekly charts for the Dow, S&P, NASDAQ, and so forth, they don't show a Gartley buy pattern. In fact, I doubt that they could show a Gartley buy pattern with price being down around $21 out here. But they don't show a completed A to B equals CD to the downside. So can it go lower? Absolutely. But be careful, is all I would say. Be careful. Be careful. Watch today's action. That may give you a clue out there. So, Robert, I hope that helps you out. I know you're asking me how much lower can it go. I don't really have any kind of price target out there. I don't. But thanks for writing in. Tom writes in, and Tom G says, good afternoon, Steve. I'm long yesterday dust, and I'm wondering your thoughts on the GDX and gold in general. So let's go take a look at, let's try to go take a look at Goldilocks. In fact, let's see if I can get this chart here powered up for you. GC. And I know I can get it powered up. It's just sometimes it takes, because there's so much data being crunched out here, it takes a little bit of time to come up with its profiles for all of these different time frames. So we're going to, I'm going to pull over the other gold chart while at least this is being worked on out here. And let me do this as well. GC, I need to change this chart anyways. Give me a second here. Go to the June contract here. Oh, come on. There we go for gold. So let me get this thing here to populate. Sorry about that. I should have had that done earlier. So now I've got everything loading. That's not a great thing. Come on, load up here for Tom. While this is loading, Tom, I'm going to do is I'm going to switch over. We're going to take a look at. Oh, all right. This one at least populated. So in essence, you're wondering what gold is doing. That would mean if you're from a directional standpoint, you are going to need gold to head lower. Here's what we know about gold right now, Tom. Gold is above the top of its daily, above the top of its weekly, above the top of its monthly, and above the top of its quarterly profile. So we better have really sound reasons to go short gold or go short the miners out here if that's the case. And from a profile level standpoint, I can't give that to you. You're just looking at it right here, smack dab. That doesn't mean that it won't move lower. It's just that, boy, from a profile standpoint, it's not there. It's just not there. This would have helped. Okay. On a 1640, what the heck? This chart, oh, you know what? Because it's got my synthetic, but I think gold just popped, didn't it? 1626. No, it didn't. I wonder what the heck is going on with my other charts out here, my short-term chart. So that's a bummer. Okay, well, we're going to switch over to the GDX. No, we're going to switch over to the GDX by going and taking a look at the XAU. So I want to take a look at the XAU. Well, let's look at it on a daily time frame. Let's pull over the daily time frame. And in order to be short the miners out here, what I would want to see is I would want to see price close below 80.58. So if you get a close in the XAU below 80.58 today, that's Stevie's red line, that would suggest that the miners want to go back and revisit the lows out here. But right now, Tom, I can easily justify that all that's really going on here is just a couple of day retracement back to test that 80.58 level out there, and then seeing some type of A to B equals CD to the upside inside of the XAU. That would mean inside of the miners as well. So that's what the daily time frame chart for the XAU is showing me. If I go take a look at the weekly time frame chart, that's what we're going to do here next. Let's go see what it has done over the course of this week. This is important as well, or last week, or any week out here. And so what the XAU did, first it formed that Rhodes momentum indicator top. So we can see that. Big old bearish engulfing, price moving higher, doing less relative energy. Says we ought to push the bulls or bears ought to be able to push price back to support. You're looking at this chart. There's not anything that I've drawn in here other than the A to B equals CD pattern. Everything else is just normal, just following the rules. And we would have said that the XAU should get down to the 65.88 level. And guess what it did last week? It got down there, it held it, it tested it, it rejected it out here. I don't have the Three River Morningstar pattern right now. I would just be cautious. I would really be cautious. You're asking me, and the other part of the question, you know, should you hold it over the weekend out here? And the only other thing that I can share with you is real quickly before we go to this breakout here, how's gold trading in all the major currencies? We got to see gold going in the same direction in all the major currencies. It's lower in terms of pounds, in euros, and yen, but it is not lower in dollars out there. You don't have a unanimous vote. I can't recommend you taking that trade into the weekend, but you can handle this better than I can. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is down about 500, S&P 52. Let's go out to California, Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How's your Friday?
Oh, it's going just great, Steve. How about for you?
Very good. Thanks very much for asking. And Clovis Oncology is what I see as the ticker symbol that you'd like to take a look at. So tell us what you're doing, what you've done, and how I can help you.
Let me give you just some quick history. I did get involved with this back in November of last year. I was, fortunate enough to get in that move. I was in it not at the very low, but in around 5.
Okay, great.
And when it went up to that 17, I got out of most of it around 15. Went up a bit higher, started to back down. I got out of the rest at 12, and then I've just been watching this. I did like the fact that it came down and got to that gap that it had, made previously, and so I rebought in. I bought 2,000 at 383, and another 2 at 368. So I think my average is like 375. Plus, I bought some call options out of ways on it. So I just wanted your opinion. It looked like it had done a smaller and a larger, ABC pattern down there, and then closed that gap on a little lighter volume. I liked what it had done at that point, so that's why I decided to buy in.
Okay. So as far as Clovis Oncology, right now it's trading above the top of its daily profile, so we're going to call that, it's gotten beyond resistance. It's traded right into the center of its weekly profile, so there's both buyers and sellers there. That's at 726, and it's trading right now at about 707. So it's sitting in an area where both buyers believe there's fair value and sellers, and you're in a real resistance level. If price is able to close above that, and it would suggest a move up to the top of that box in that $15 area. It's 1448 is the exact number on that profile. So that's what that shows us. Let's pull over my other charts out here, see if we can figure out where the breakdown resistance levels are. And lo and behold, you ran right into one today. 713 is the number. Ideally, you'd love to see it close above 713 today. If you don't, it means that price ran into a clear resistance level where it had most recently broken down. And it could even pull back to my oscillator and change line at 471. Whereas, if price can close above 713, even though you've got a gap out there, closing above a resistance level typically means that you would go up to the next resistance level. Now, on a daily time frame, I don't really have that. So right now, as we speak, it's trading right into resistance. So and we also know that was in the daily time frame. We also know that we said, hey, look, that point of control on the weekly profile is also a resistance level. So it's up against this significant resistance area, and that's helpful for you to understand where the battle is. Not necessarily saying that you need to take some action, but then at least in your mind, you know what's going on. And that's what we know right now, both on the daily and the weekly chart with regard to profiles. When I pull over the other weekly time frame chart without my profiles out here, what do we see? All I see right now is the positive, which is prices above Stevie's red line, which is 611. And this would suggest that if price can, on the daily, get above the breakdown level that we looked at, then it would give us a target of 1353 out here, and that's the weekly breakdown area. And for Clovis Oncology on a monthly time frame, see what we have out here. If anything, from a pattern standpoint, I don't have anything to assist us from the monthly time frame chart, but plenty on the daily and the weekly. So with that information, what other questions does that pose for you, or does that just simply help you out?
That's exactly what I was looking for, Steve. I figured we were going to be running into some levels of resistance. You've more or less pegged those for me. That's what I was looking for, and now I'll just watch those and see if we can't clear them. If it doesn't, I'll just have to reassess it at that point. But that's really what I was looking for. You basically answered my question.
Yeah, when you go into resistance or support, one of the things that you certainly like to see volume moving into it, or a wide-ranging bar. And so today you've got a wide-ranging bar. Typically, wide-ranging bars, the market doesn't usually end on them. It can, but it usually doesn't. And today you've got volume picking up. You're already 13 million shares today. Yesterday's volume was just 8.7. So, you like to see it hitting resist. If we're hitting resistance on lighter volume, that would probably make both of us a little bit more concerned. So you like the way that it's hitting it, but resistance is resistance.
Yeah, I like the way it's acting. We'll see if it can't get above that today. That would be nice, like you said. Well, yeah, we got a bit more trading to go. We'll find out what it does, at the end of the day.
Yep. Okay. Hey, sounds great. Hey, Brent, thanks so much for calling. As always, good to hear from you, and have a great weekend.
Yeah, it was great talking with you, Steve. I always appreciate your help. Just have a great weekend. You take care, and I'll talk to you soon.
You bet. That was Brent in Martinez, California. One of our denners wanted to take a look at CenturyLink, I believe is what it was. CTL is the ticker symbol. So let me, I don't know why it didn't just automatically update, but it didn't. But let me hit the enter button one more time. There we go. So CenturyLink, CTL, it might have been Jimmy that was asking for this. Jimmy, CenturyLink from a profile standpoint doesn't look very good. It's trading below the daily, the weekly, and the monthly out here. So you and I are going to have to go find a bottom pattern out here. Otherwise, CenturyLink says it wants to move lower, as what the signal would be. Now let's go take a look at the daily time frame chart. What do we have out here? We actually have a bullish Rhodes momentum indicator bottom out here. It did it several days ago when we had that bullish reversal signal, that bull separation line. But what we don't like, what you don't like, what I don't like is even though we had 1 day's close above Stevie's red line, guess what? We didn't get the second day's close out there. That's why I like to use that little 2-bar system, above support or below support, above resistance. You know what I'm saying out here. You look at the trading session March 25th, it was just a test and rejection of Stevie's red line. So you got a bottom, hasn't been violated. And you've also got some real strong resistance out here, which right now is about 922. You need to see 2 closes. If you're long, you need to see 2 closes above Stevie's red line for this thing to give you any kind of action out there. On a weekly time frame, let's see what we have out here for patterns. We don't have anything. This week is going to be, looks like wave number 7 or wave number 2 to the downside, bar number 7 of a TD9 count. No bottom signal there. If we look at the monthly time frame, prices moving lower, doing less relative energy. You need a bullish reversal candle. You are in wave number 7, but that can extend. So no real. You've got just the daily to hold on to, because I would say, Jimmy, I don't know if you're long, you're looking to get in this because of nothing solid on the weekly and the monthly out here, even any sense of a bottom signal of the tools that I use for bottom signals. I would not get into this until you see 2 closes above Stevie's red line, even if it costs you a bunch. Because the reality is, without a trade above Stevie's red line, it could cost you a bunch more than just a bunch. So, Jimmy, I hope that helps you out with regard to Yeah, I know it's a long-term hold. What you're looking for, you've got to see a close above that red line level out there. At least that's what Stevie's chart work is communicating to both of us. Folks, if you've got some questions inside the den now, we're about to go to break, and I think we come back to the 2-minute wrap up. So we'll just do that. Right now, let's go take a look at the markets out here. We'll finish off by taking a look at what's going on, I suppose, intraday inside the markets, levels to be watching for. Dow's off 542, S&P 56. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we take a look at the Oil Services Trust out here, OIH, the ticker symbol. What you should know, G7, is price ran right into resistance. That was the bottom of its daily profile. So your real strong resistance level is 444. Sometimes old support can become resistance. In this case here, well, that's exactly what has transpired. Now, you have a bottoming signal out here. You've got the Rhodes Momentum Indicator bottom signal that occurred on March 19th when that bull sash candle, price above Stevie's red line. But really, for this to get some traction, you're going to need to see it close above that 444 level out there. Be careful. Let's go take a look at what's going on in the equity futures contracts out here. Right now, let's look at really short term. Well, here, daily. Let's start with the daily. This is the NQ out here. As long as price remains above Stevie's red line, 73.65 out there, then this will remain bullish. If price were to close below that, we will go revisit the lows, if not lower. Let's watch to see if on a 3-day pullback out here, lower close today, lower close on Monday, lower close on Tuesday. Let's see if those closes, should they unfold like that, hold that 73.65 level. Now, that's going to change over time out there, but as long as it does, that could be the next buy inside of the market. If we go start taking a look at short-term time frames, here's a 5-minute time frame. Right now, price is dealing with 7,700. A close above this would say the price could rise to 77.51. That would be its next battleground. If we take a look at the 10-minute chart, the 10-minute chart has wave number 7 as a bottom out here. That was at about 9:30, 10 o'clock this morning. And but price needs to close above 77.54 for it to suggest to you that price really wants to move higher. That's its resistance level. 30-minute time frame chart, no bottoming signal out here. Probably an A to B equals CD pattern, so there's a Gartley buy. I can't draw it in right now on this application, but 77.57 is a key level of resistance on the 30-minute time frame, and on the hourly time frame, it's 77.69. So everything is really below resistance at this stage of the game. Folks, thanks for being here all week. Stay tuned. 2 great hours are left, and I'll look forward to seeing you on Magical Monday. Have a fantastic Friday, great weekend, and we'll see you Monday. Take care.